Happy Tuesday and happy Boxing Day, everybody. Today is December 26th, 2023, and this is your Tuesday market update. I hope you all enjoyed your long weekend, especially your Christmas holiday. We have 2 short weeks at the end of this year, and this is the first of those. Markets are also closed this coming Monday for the New Year's Day holiday. That makes this the last market update of the year. Please keep watching, but also watch for some changes. I plan to reboot the distribution of these videos. They still should be available on LinkedIn and Twitter, or now X. They will always be available on the website. Watch for signups for the new email distribution, and possibly when we can get the technology and regulation together, hopefully text messaging too. The key will be to get signed up to get the videos in the place and frequency of your choosing. That's the plan. I would like to minimize the emails you get unless you really want to get them in that way, so please be on the lookout. Let's review last week's market and let's preview this coming week. Last Monday, stocks gapped higher on the Fed had Goolsby's comment, which overshadowed the hawkish Fed, comments from Mester. Soft landings being called for left and right. Note how hard and rare this is, but we'll see how things come along. Housing data had markets extend their gains mid-morning. Oil markets are reacting to the Red Sea attacks and the decision by so many shippers, including a few of the largest oil shippers, to redirect their ships. Not enough to make a huge difference, though. Not yet. The key word still in the region is containment. But I will point out there are other keywords that are starting to be spoken, and these are supply chain. Recall, if ships start to go around Africa versus the Suez and Red Sea, over 12% of global trade, by the way, use the Suez route. This adds weeks and thousands of dollars to the goods. Shipping costs are up 20% so far. Does this sound familiar? Not enough yet, but please watch out for that. Fed Head Daily did talk about policy late in the day, and that brought some profit taking, but the S&P still finished at the best level since January 2022. Recall, this market seems to be pricing in 2 elusive news items in hopes that they will appear. First, the soft landing, as I mentioned, rare. And second, inflation back near the Fed's 2% target, and that has not happened yet. Yes, the markets look and price forward, but watch for disappointment. This is our caution. It does seem that the markets are ignoring most of the news, rose-colored glasses, short of Powell coming out and saying, just kidding, no cuts in 2024. This market seems that it will look past any other Fed speak. By the end of the day, the Dow ended flat, S&P up about 0.5%, the NASDAQ just about 0.2% higher. Tuesday brought another gap higher, this time Bank of Japan news. They kept rates unchanged as expected, but they pushed back on rate hikes. That was a change. Housing data still supported the soft landing narrative, and Barkin and Bostic with supportive comments also, more and more supporting the markets. Thoughts about rate cuts in 2024, just a note of caution and a preview of an upcoming special video. Remember that the rate hikes and higher for longer, these things were to get inflation under control, and rate cuts, they are 1, in response to that, and 2, to keep the economy humming along or to save it from itself. No. Well, unemployment remains at or near historic lows. Consumers are strong. Retail sales, housing, consumer confidence is up. Inflation expectations are down. So why does the Fed need to cut rates to support the economy? Not sure that argument flies, but there are some deeper economic reasons. Real interest rates, we'll have to see. Overall, to end the day, the Dow was up about 0.2% for the day. S&P up about 0.5%, and the NASDAQ up 0.2%. It cannot go up every day, I guess, at least not at the open. Markets opened lower on Wednesday after soft earnings. Pandemic winners FedEx, Winnebago, and General Mills all disappointed on earnings and outlooks. Eco data was better than expected, but not enough to move expectations. UK and EU inflation data brought the Treasury yields down, and that helped shake off some nasty negative vibes. Again, for a bit midday. Then about 2:30 Eastern, there was a significant reversal. All the buyers seemed to leave town at once. A lot of small straws, and they finally broke the back of the market. Spoiler alert for the day. By the end of the day, the Dow was down 1.25%, S&P down 1.5%, the NASDAQ also down 1.5%. Smelled very algo-driven, but the oxygen does seem thin up here. In the near term, anything can get sellers riled up. And a good night's sleep seemed to push all those negative feelings away. Thursday markets opened higher again. Somewhat softer data had markets back to the Fed cut in early 2024 mode and off to the races. Earnings were stronger, and some M&A news helped moods also. The data being topped off for the day with core PCE, GDP, and even jobless claims, all as good as it gets on the eco data and the news fronts, and the rebound was underway. The Dow closed up almost 1%, S&P up a bit over 1%, and the NASDAQ up 1.25%. In theme, markets kept climbing on Friday, mostly Dow about even, but S&P and NASDAQ higher. The PCE numbers that was such in the headline came in with prices rising less than expected, and that was good for market outlooks. One of 2 keys that I mentioned before, inflation coming down. Santa Claus rally off to the races. By definition, the Santa Claus rally is the last 5 trading days of the year and the first two of next year, about an 80% success rate in the past 10 years. Tech darlings getting scooped up and Nike getting thrown out with the trash, down on earnings, outlook concerns. By the end of the day, the Dow with the Nike weakness was down slightly on the day, S&P up less than 0.25%, and the NASDAQ was up about 0.25%. 8 straight weeks of winning for the market. For the week, the Dow was up 0.25%, S&P up about 1%, and the NASDAQ was up about 1.25%. Let's look into this week and let's see what's on deck. A short week and one that will carry the will be the carry on of the historic Santa Claus rally. We'll have to see if it keeps the record up. Tuesday, we'll get some housing data, and Wednesday, we'll get some manufacturing data. Thursday, we'll bring some more housing and jobless numbers, and Friday, we'll get Chicago PMI. Overall, since most of the traders are home for the holidays, I'd expect little to happen, but that has not been a good bet these days. I would add that you know that the week will be light on news when all of the what to expect articles are either not updated at all or nothing substantial. What I'll bring you next Tuesday, first market update of the new year, is some more thoughts on what will be the fuel for the market engine in 2024 and some thoughts on what items will fuel what direction. This will be the list of things to watch, and I'll keep watching them with you and reporting on them here. As always, stay in touch. If you've questions before the end of the year, please be in touch. Let's be sure to circle together in early 2024 and be sure our plan for the year is in place. Make the plan, stick to it, make changes only when necessary. Happy holidays and have a good week.